This is the briefing for Friday, March 13th. Hopefully that's not a bad sign. Indices today were down, of course. Oil was up slightly. Indices were down slightly. But I think the most important aspect of that analysis is the fact that we're not at a point of seeing the internals becoming an extreme point to the weak side of the market. In fact, they're fairly muted. They're weak, but and they're certainly supporting this move to the downside. But they are not at a point where I would suggest that everything is getting ready to collapse, except for one thing, and I'll get to that in a minute. This is a 60-minute chart of the spiders, the Qs, and the IWM representing the Russell. You can see this is a short-term key reference area. This is a short-term support area, which is basically this low. So this was this past low that was occurred on, I think it was February or March 9th. And then, of course, we took that out in today's trading, closing right back at it. Really not an impulsive move in today's trading. Same thing with the Qs. Qs coming down and testing this, this March 9th low, not breaking through it. And the same thing with the Russell, coming down pretty close to testing this low. And this low goes down to from about 245 down to about the 244 area. So it's only about a point spread between them. S&P 500 breadth was only positive 15 shares in today's trading. In the NASDAQ was 1,300 shares negative, and the Russell was a negative 439 shares. Now, the breadth readings, and for my analysis, I use the breadth readings pretty carefully in determining the strength or weakness, at least to the short and intermediate time frames of each of these indices. But there's an overall function that I have that I look at that is giving me some great concern from an internal perspective of the markets. And that's the fact that a lot of times we see that the higher weighted stocks will weigh on the market in one direction or another, but then eventually the majority of stocks will begin to pull in the opposite direction of the higher weighted stocks, assuming that the market is unsure of where value is, at least at that point in time. And this is probably the most concerning thing that I have right now in terms of the longer term development of the market. I covered this in yesterday's briefing, but I think it bears talking about in tonight's briefing as well. This is the percentage of stocks above the 20-day moving average for the S&P 500, and this is the percentage of stocks above the 50-day moving average for the S&P 500. Now, you can see, going back to here, on the 20-day moving average, this was on February, I think it was February 20, well, I'm not sure. Let me see if I can get that. Yeah, that was March 23rd. No, I'm sorry, not March 23rd, November 23rd. If you look at where price is, and I'm not sure the date really makes much difference, but you look at where price was at this level of decline, or the percentage of stocks below the 20-day moving average, and look where we are today. A little bit of a tick up in today's trading, but you can see how much further potentially price could fall based on the percentage of stocks above their moving averages. And the same thing with the 50-day moving average. You can see that it is testing this level, but you can see where price is. This gives me somewhat of a hesitancy to say that we've reached a bottom, although the indices are pretty close to or have just traded through important key reference areas. This is the percentage of stocks above the 20-day moving average for the NASDAQ. You can see the same thing here. Look how low it was there, and look where price was on that day. This is the percentage of stocks above the 50-day moving average for the NASDAQ. And you can see the same thing here, about the same levels, but price is really not quite there yet. And then in the Russell, the Russell is, there we go. There's the Russell 20-day moving average and the percentage of stocks above the 50-day moving average. And you can see where price is compared to what these levels were in the past. So that gives me great concern, because what it suggests is that the higher weighted stocks are not really carrying this market, not to the strong side, to the downside, not strongly to the downside, but the majority of stocks in this market are beginning to carry price lower, but the internal perspective of them trading through or the number that are now below their 20-day moving average or their 50-day moving average is pretty significant from an internal perspective. Now, looking back at the daily chart, you can see the 670 area was important, an important support level for the spiders. And you can see we broke through it on this day, traded higher the next day, paused the day after that. Yesterday we came back down, tested it, and traded through it, closing below it, and then we extended that in today's trading, closing right at 662 level. And then the next level of support comes in at 650. Now this is basically an intermediate term key reference area, which is very important. Testing and breaking 650 is going to be a significant event should that happen in the S&P 500. So we've got a little bit of time before we see what happens here. And of course we could see, because the market is basically a news-driven market right now, very difficult to analyze from a technical perspective and or a fundamental perspective. But because anything that comes out of the Middle East right now, whether it's bad news in terms of the Strait of Hormuz or whether it's good news, you're going to see the market react to that, and it's based off of what oil does. If oil is up, market's down. If oil is down, the market's up. And that's kind of what we're faced with right now. You can see the percentage, the 52-week highs minus 52-week lows, negative 284, and it is trending lower, trending down, as the percentage of stocks above the 20 and 50-day moving average was doing as well. A little bit of bump up in the NYSE in terms of its market breadth, and net volume bump up also, but negative. So most of the volume today was negative volume as opposed to positive volume. Same thing with the NASDAQ. The Q's testing this 590 area. Very important area. You can see how many times it was tested and then we bounced off of it. So breaking that's going to open up trading back down to the 585 area. And if that's broken, that puts us in a longer term counter trend rotation, which could be significant. Volume falling off today, that's very interesting. And you can see on this move to the downside, how volume is falling off. So we may be getting to the point of where there's some exhaustion in the market. Net volume still negative, but ticking up in today's trading as well. And in the IWM, testing this 245 area, breaking that's going to open up trading down to the 235 area, and all the way down to about the 228, 229 area as well. Volume still pretty good in the IWM. Breadth in the Russell, negative 439 shares, but ticking up slightly, and negative net volume as well. So from an internal perspective, the market is showing some weakness, but it's not showing, and I'm trying to figure out the best way to put this, it's not showing strong weakness in it, other than the fact that, and it keeps coming back to me even as I analyze, and I was trying to look at putting on a position going into the close today. But the fact that the percentage of stocks above their 20 and 50-day moving averages is declining so rapidly and so strongly that it just gives me great concern, and I just felt like it's better to sit on my hands and not do anything, at least at this point in time. And the other side of that is that if there's any additional bad news coming out of the Middle East over the weekend, the oil is going to skyrocket, and stocks are going to move substantially lower. On the other hand, if there's any good news coming out of the Middle East, that might be a probability assessment we need to make also. If there is any good news, then oil is going to fall and stocks are going to start to rise again. So once again, I think that this is a buying opportunity, but is the bottom in? I am unsure of that, and we are at important key reference areas, and I would hope and think that once we get things resolved in the Middle East, that this market is going to be a tremendous opportunity to buy. Right now, the percentage stocks above the 20 and 50-day moving averages, it scares me a little bit. So have a great weekend, and I'll pick this back up on Monday for subscribers.